The market's trading like yesterday's FOMC was an absolute nothing burger. And the truth is that at face value, it was an absolute nothing burger. But if you read between the lines, I'm going to show you why I think the FOMC was actually very, very, very hawkish yesterday. Very negative FOMC. And I think the market will start pricing that in. Also, I want to talk about this specific chart today, the oil chart, because as you can see, the oil price is going up. And that leads to speculation that today, whilst the US markets are closed, the US may actually join the war and actually invade Iran. We're going to talk about the possibilities of that and why actually oil is moving up. Then I want to talk to you about why I think that this market could actually have a correction. I'm not going to say crash, it's not going to be a massive crash, but we could have a major pullback in the next 14 days. And once we're done with that, I want to talk to you about the Genius Act that was actually approved yesterday by the Senate. And I want to talk to you about all the different implications, because I think what you're not really seeing is that this Senate Act can bring trillions of dollars into crypto. And when I say, I'm going to say it again, trillions with a TR, trillions of dollars into crypto. So we've got a massive show today. I know it's Juneteenth day in the US, so a lot of our US friends are still asleep, but we're going to bring you a massive show filled with alpha and love and wisdom and everything that comes with it. Let's go, guys. Okay, it's Juneteenth. I got a little bit of a flu, but my amazing chief of staff has made me this tea. I mean, look at this tea, guys. It's got ginger, it's got mint, it's got lemon, it's got tea, and I added a bit of honey just to make it amazing. So that should keep my voice going while I bring you amazing crypto love. I should also keep water on my laptop while I bring you amazing crypto love and crypto wisdom today. And I know it's Juneteenth, and usually on holidays in the US, the news cycle is very, very, very slow. But this show is not going to be slow today because there's a lot happening today that we need to discuss. So I'm going to bring you, where did I put my, I'm going to bring you bombs and bombs and bombs and bombs and bombs of alpha. You just need to do one thing. Just all I'm asking you is just obliterate the like button, okay? I'm going to take sips of tea. Every time I take a sip of tea, I'm going to bring you more alpha. That's how basically it works. So let's start with the first. Oh, my chief of staff is the best person in the whole world. Anyway, let's get into it. So we had the FOMC meeting last night. Actually, before we get into the FOMC meeting last night, I know that it seems like the markets are very, 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 very quiet, right? And actually, the markets are very quiet. There was actually a trader on Poly Markets where this trader made $250,000 by betting that nothing will happen. He bet that Ethereum wouldn't reach 4,000 in June. Putin wouldn't meet with Zelensky out of Ukraine. He pretty much took a bet that nothing would change, nothing would happen. And that bet basically paid him out $250,000. So if you feel like the markets are slow and the markets are boring, you actually may not be that far from the truth. But on that note, let's talk about the FOMC, right? So we had the FOMC last night, and at face value, it really felt like nothing happened. The price now is the same price as it was yesterday before the FOMC. Yes, we went slightly down to 103,500, but then we went back up. And the reason why that happened was because effectively what traders were saying is, look, interest rates were unchanged. The Fed's dot plot basically showed that there were going to be 2 rate cuts, which is exactly what the dot plot said the last time they had a dot plot. So nothing changed when it comes to that. And then there were some movements when it came to GDP and stuff like that. So at face value, yesterday's FOMC kind of felt like it was a nothing burger. But I read between the lines. And when you look between the lines, to me, it kind of feels like there's a hawkish undertone that no one spoke about yesterday. I want to talk to you about that hawkish undertone. So there are 2 things that the market doesn't like. The first thing that the market doesn't like is uncertainty. When you have uncertainty, markets don't like that, and usually markets trade down. Now, what's the peak of the uncertainty? The peak of the uncertainty is when the Fed is uncertain. When the Fed is uncertain, then you know that even the Feds don't have conviction in their marketplace. And when the Fed has uncertainty, then let me tell you, I've got uncertainty when the Fed has uncertainty. If you look at the dot plot, and for those of you who don't know what the dot plot is, every quarter at the FOMC meeting, they take the 19 people that work at the Fed, the 19 governors, and they'll ask them, where do you think interest rates will be at the end of 2025, at the end of 2026, and at the end of 2027, and in the long run? Okay? last time we had this, the consensus vote was that there was going to be 2 rate cuts. So we are here now, and the consensus vote was that there were going to be 2 rate cuts, and we were going to be at between 3.75% and 4% by the end of 2025, which equates to 2 rate cuts. And we're still there. In fact, if you count the number of dots, 1, 2, 3, 4, 5, 6, 7, 8 people said that there's going to be 2 rate cuts this year. 7 people said there are going to be no rate cuts this year. 2 said there were going to be 3 rate cuts this year, and 2 said there was going to be 1 rate cut this year. So what do you read in between the lines? What you're reading in between the lines is that there's no consensus amongst the Fed governors. Half of them are saying, or 7 are saying that there's going to be no rate cuts. 2 are saying there's going to be 1 rate cut. 8 are saying that there's going to be 2 rate cuts. And the market's taking that as consensus amongst the Fed that there's going to be 2 rate cuts this year. The first issue that I'm having around the uncertainty is that there is no consensus amongst the Fed. Pretty much half of them believe, one majority believe that there's going to be no rate cuts, and the other one believes that there's going to be 2 rate cuts. That, to me, is a little bit of a problem, because what I want in the Fed is I want them to be united in their decisions. I want them to understand the data and to say that based on the data, they've got a single-minded strategy. That's not the case here. Half say there's going to be 2 rate cuts, half say there's going to be no rate cuts, and then you've got the stragglers, which are on the other side. So that's the first bit of uncertainty that I'm seeing. It means that the Fed governors themselves don't know whether they should be reducing rates or not reducing rates. Now, remember, there's only 2 more Fed meetings this year. There is a meeting in, we can just look at the meetings. So we have a meeting in 30th of July, 17th September, 29th October, and December. And the July meeting says 91% chance that there's going to be no rate cuts. So that's the first thing that I didn't like about yesterday's FOMC. There is uncertainty. Markets don't like uncertainty. What markets like even less than uncertainty is they like when the Fed has uncertainty. Markets really don't like that. And that for me is something that never, ever, ever came out yesterday. The second thing that happened yesterday, not only did they have to do a dot plot, but they also had to tell us what they think the GDP is going to be at the end of 2025, 2026, and 2027, and what the unemployment is going to be at the 2025, 2026, and 2027. And if you add up what the Fed members said, they all revised their growth forecasts lower from 1.7% to 1.4%, and they revised the unemployment higher from 4.4 to 4.5. What does that mean? It means you're going to have a slower economy with more unemployment. Okay. Now, in other words, stagflation. Now, what is stagflation? Stagflation, I looked it up on ChatGPT to make it simple. It says, stagflation is an economic condition characterized by 3 simultaneous problems: stagnant economic growth, high inflation, and high unemployment. Okay, now why is it unusual? Because normally when inflation rises, it means that the markets are heated, and when the markets are heated, there is more employment. And the other way around. But when you get stagflation, the pattern keeps, so you have prices keep rising, you keep getting inflation, but at the same time, the economy is slowing and jobs are lost. So tariffs, for example, could cause massive stagflation. And so the basic Fed governor basically said their base case is actually stagflation. Okay, now what's the problem with stagflation? The problem with stagflation is that the Fed doesn't actually have a medicine for stagflation. We know that if the inflation is high, the Fed can increase interest rates, and that will bring inflation down. We know that if unemployment is high, the Fed can reduce interest rates, stimulate the economy, and that will get employment up again, right? The problem is that when you have high unemployment and high inflation, the Fed is caught in a conundrum because there's absolutely nothing you can do. So what do we say about this? Well, it's like going to a doctor, and the doctor says to you, look, you're sick, and I'm going to treat you, right? I'm going to give you medicine. And I know that the medicine that I'm going to give you is going to put you in a position where later on I won't actually have tools to medicate you. That's pretty much what's happening with the economy. the Fed is basically acting right now as acting in such a way that they know that it's going to cause stagflation. And they know that when you get to stagflation, there's really not much that they can do. They don't actually have tools to deal with stagflation. And that's what worries me about last night's FOMC. Yes, it seemed like a nothing burger. But again, if you read between the lines, number one, the Fed people aren't actually, the governors themselves aren't actually united. And number two, the one place where they are united is that the base case now is actually stagflation. And the reality is that if they get to stagflation, there's nothing they can do. Because as ChatGPT says, it puts the central banks in a tough spot. Raising interest rates fights inflation but can worsen unemployment. Lowering rates might boost growth but worsen inflation. Oh, shit. And that's the base case, what the Fed governors are basically talking about now. They're talking about a base case where you're getting stagflation. And that's why I think that what happened, someone says, no offense, but this guy doesn't know what he's talking about in this regard. Okay, Freehammer, maybe you can come here and you can do the show. Because I think I have a pretty good understanding of exactly what's going on, and I think that a lot of people actually landed up missing that. And to be honest, I do know that Trump was pressuring Powell yesterday to reduce rates. He called him too late Powell. He said he wanted to nominate himself as the Fed chairman. And the truth is that I actually believe that the Fed, I know it's not the best opinion in the whole world. It's not the most popular opinion in the whole world, but I actually believe that the Fed cannot cut rates, or they have no reason to cut rates. Inflation isn't at 2%, although it is coming down, but they got tariffs on the horizon, and they don't know what the implications of those tariffs are going to be, number one. Then they've also got unemployment. So the issue is that right now the Fed has no reason to move. Nothing is broken. They don't need to reduce rates. And so I know Trump wants rates to come down because he's got debt to refinance, but Powell's job isn't to refinance debt. Powell's job is to keep inflation and unemployment at good levels. And actually, Powell's doing an amazing job at that. And I put myself in Powell's shoes yesterday and I said, what would I have done? Would I have reduced interest rates? Absolutely not. I'm not reducing interest rates. Why? Because I don't know what the impact of tariffs is going to be. And so that is pretty much where the Fed is at the moment. Let's move on to the next topic, which I want to talk about today. And that, to me, is a little bit more worrying because it's a little bit more right here, right now. And that is this chart over here. So this is the oil chart. And you know that I drew a line. I drew a line on that oil chart over here. And that line I called the war line. Now, what is the war line? It's the downward sloping, it's a downward trending oil price since 2022. So the height of 2022 was $131. And then since then, oil has been on a downward trend, and now oil is trading at $76. $76 is higher than when Israel invaded Iraq and Iran. And since then, the price of oil actually came down to like $72, $73. Now we've got the oil price going very, very, very close to the trend line over here. Now, my theory is that everything that we hear in the media is noise. Until we break, and the only source of truth, the only signal of truth is this downward sloping trend line. And if we break this trend line, it means that there's a major escalation in the Middle East. Now, what the market's telling you is that we're very close to touching or breaking that trend line. Now, what can that mean? It could mean that the US is actually going to step in after everything that's happening. By the way, these are some attacks that happened in Israel. That's the diamond building that was blown up, Diamond Exchange. That is a medical center. It's called Soroka Medical Center that was blown up. You had Trump talking yesterday, and he says, look, we're way beyond a ceasefire with Iran.
He said I was going back home to make a ceasefire. Not a ceasefire. We're long beyond ceasefire. And I said, why do you say that? Why would you say ceasefire? It's a bad term to use. Because a ceasefire means like everything's going swimmingly, we'll take a little time off. It's not. We're not looking for a ceasefire. We're looking for a total, complete victory. Again, you know what the victory is. No nuclear weapon.
Mr. President.
So I thought it was a very badly worded statement by him, and obviously I let him.
He's speaking about a statement made by Emmanuel Macron, where Macron said he left the G7 summit to go and negotiate a ceasefire. Trump saying, there's no ceasefire. we want full, immediate annihilation of Iran's nuclear facilities, and that's basically what we're after. Then we had movement of planes in the Middle East, so these big bomber planes in the Middle East moving around. Then we had news that Trump approved attack plans on Tuesday night, but hasn't made a final decision yet. Now, these again are all media headlines, right? These are all media headlines that are actually going in. Trump's asking if these bunker buster bombs will definitely annihilate the nuclear facilities. He wants to avoid a prolonged war. He says if they're going to strike, then they need to be sure that these strikes are going to destroy the Iranian nuclear capabilities. Now, here's where it gets interesting. I love this, just normal Trump attitude.
Kevin, what do you say to the Supreme Leader of Iran says that they will not select?
Say good luck.
And what is the end game?
Only Trump can. I mean, that's like the mic drop moment. What do you say to the president of Iran? Well, I say good luck. I don't know if you saw this. I tweeted yesterday. I said, I tweeted this. I love this tweet. It's my own tweet. That's why I love it. So it's this tweet. Remember how Elon apologized to Trump? And he said, I regret some of my posts about President Donald Trump. They went too far. And then there's one by like a fake one, obviously, by 𝗙𝗘𝗏𝗏, where he says, I regret some of my posts about President Trump. They went too far. Anyway, so today, the US markets are closed. Today is Juneteenth, okay? So the US markets are closed today. And that has led a lot of people to speculate that because the markets are closed, it would be a great time for the US to actually invade Iran and to have minimal damage on the markets while they get the job done. So I'm not saying it's going to happen or not going to happen, but there is speculation that a good time for Trump to invade Iran, if he was going to get into the war, is today, whilst the markets are closed. Now, obviously, the futures might react, but if they declare mission accomplished, then by the time the markets open tomorrow, then everything will be under control, basically. And then they've nuked the nuclear facilities, and they have avoided a market nuke, so to speak, right? So that's what's happening in the East. Just wanted to again just highlight to you. I did speak about this yesterday, but whilst the Iranian economy is in tatters and everything else, the Tel Aviv stock market actually just keeps going up and up and up. I mean, just look at this. It's up another 1.35% today. And what this means is that the market's obviously celebrating that Iran's no longer a threat. Can you imagine that? Like, Iran's no longer a threat. It's been this ultimate threat on Israel for a long time. So every time people want to invest in Israel, they always think, what if Iran releases a nuke? What if Iran releases a nuke? Markets are telling you that by removing the threat of a nuke, we now have Tel Aviv markets at pretty much all-time highs. I was quite astounded, from 2023. So end of 23, which means a year and a half, the Tel Aviv stock market's up 80%. Can you believe that? 80%. That means the Tel Aviv market likes this war in Gaza. It likes the war. It likes the Hezbollah war. It pretty much likes all of these wars so far. And again, I think the markets are seriously the only real indicators. I think that there's a lot of noise out there, right? I think that the media is following a lot of narratives. That's why, to be honest, I'm not covering a lot of the attacks and stuff like that, because the truth is, I know it's all noise and media propaganda that is, leaked into effectively distract us from what's actually going on, right? And one of the things that I actually think is going on, which actually could hit markets in the next 14 days, is that I think that with all the media attention around the war, a lot of people seem to have forgotten that up until today, we have got about 0 trade deals. So despite all the promises from Trump that during this 90-day pause, we're going to get a whole lot of trade deals, we actually haven't had very many trade deals. In fact, EU and Japan both say that the US is being very tough. And right now they're still at the negotiating table and there's very, very few trade deals. Now, big reminder that on the 9th of April, there was a 90-day pause and lowered 10% reciprocal tariffs. And that was to give the Trump administration time to negotiate with the lines of countries that were lining up outside to negotiate trade and tariff deals then. Now, despite the lines of countries, we actually haven't had any tariff deals announced. Now, look, I'm not naive. I know that these are very, 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 very complicated deals, crazy complicated deals. There's a lot of negotiation. I wouldn't like to be a negotiator in these rooms, especially with my ADD. Too many things to negotiate, too much going on. But here's the deal. If we don't get announcement of trade deals, and right now these are the announcements we're getting. Trump says he's got negotiated 200 trade deals, but he won't say with whom. There hasn't been any announcements of trade deals, or there have been very few announcements of trade deals, right? He said, Scott Bessent said they would be announcing deals as soon as this week.
There are 18 very important trading relationships. We are currently negotiating with 17 of those trading partners. China, we have not engaged in negotiations with as of yet. So I expect that we can see a substantial reduction in the tariffs that we are being charged.
Anyway, long story short. Why do I say the market could come down in 90 days? Remember when Trump first announced the tariff and trade deals? That was here in February. And you can see that since then, because of the tariff and trade noise, the markets came down a hell of a lot. That's the chart of the S&P since the trade deals. We've since rebounded. And the reason why we rebounded is because there's been no talk of tariffs for a hell of a long time. But the 90-day pause ends in 14 days, which means that if we don't get some announcements of trade deals in the next 14 days, the tariff noise may come back to the market. And if a tariff noise comes back to the market, then maybe we could actually get the market starting to come down again as Trump carries on talking about all the tariffs and the tariffs and the tariffs, right? So that's the thing that I'm slightly worried about. It's right now nobody's talking about it. Everyone's headlines, all the headlines are occupied with the war. That's what's selling at the moment. People are forgetting that there's been no trade deals, guys. Where are all these 200 trade deals that Trump's promised us? And if we don't get the trade deals, then he's going to stand up on the day of the 9th of July. He's going to get up on the 9th of July and he's going to say, all right, we didn't manage to do deals with the EU and blah, blah, and now I'm putting the tariffs back on. And this time I'm not removing the tariffs until and unless we have a deal. And if that happens, then the problem is that markets are going to start going down again. So heads up for the 9th of July. You have been warned. Truth is though, even if we get some tariff noise on the 9th of July, I'm not selling any of my crypto. I'm not selling any of my stocks. Why? Because it's short-term noise. And that I know that at some point they're going to negotiate tariff deals. If you can, have some cash handy because there may be some noise, there may be some volatility around the 9th of July, and then you can capitalize on it. So my advice to you is you've got 14 days to build up a little cash pile. Maybe go and do some work on Fiverr. I don't know, maybe take up a second job, a waitering job. Maybe you can play Josh table tennis. He's not that good anymore. And you can beat him and get money out of him. Do whatever you need to do to build up that cash pile for the 9th of July because you've been warned that on the 9th of July, if there are no trade deals announced before then, Trump's going to come out full tilt and he's going to be talking about trade deals and tariffs and putting the tariffs back. And that could hit the markets exactly like it hit the markets last time. We're not selling, as Shinobi says. We're not selling. Someone says you can do DoorDash. You can do DoorDash. All right, let's talk about the other big news of the day, the Genius Act, which Trump says the Senate just passed an incredible bill that is going to make America the undisputed leader in digital assets. Nobody will do it better than us. It's pure genius. Digital assets are the future. So the Genius Act actually did pass the Senate yesterday, which is people don't understand how big this is. It's big because it's big because it's good for crypto. But it's big because Trump says, bring it to me and I will sign it. He's basically saying, no delays. He says the House will hopefully move lightning fast and we can pass a clean Genius Act. Get it onto my desk ASAP. No delays, no add-ons. This is America's brilliance at its best and we are going to show the world how to win with digital assets. There's a very strategic reason why the US is doing this. The US want domination of digital currency because whoever wins domination of digital currency becomes the world's reserve currency or the next world's reserve currency. David Sachs has heard it. He's seen it. Listen.
I think you'd see traditional financial players getting involved in it, and that's why the float is expected to grow from, call it, roughly 250 billion to trillions of dollars. And that would create more demand for the U.S. dollar internationally. I think you could see other economies start to dollarize from the bottom up as their citizens would prefer to use U.S. digital dollars as opposed to whatever fiat currency they're using. And that would create potentially trillions of dollars of new demand for U.S. Treasuries. So I think
So
this bill
you create the dollar as the reserve currency of the digital world. You then get nations or people in nations to use that currency. Nations like Argentina, Venezuela, a whole lot of other nations. And then that creates, because people are holding dollars, that creates huge demand by people like Circle and Tether to hold US treasuries. It's a flywheel that the US love and really, really want. And as he says, it could bring 12, he says trillions of dollars. Scott Besson says he's reporting that stablecoins could grow into $3.7 trillion. So that's huge money coming into crypto. Now the question is, who benefits from this? Well, the first thing is I want to say to you that crypto benefits from this. More stable coins, more liquidity in markets, more opportunities, more people buying in crypto markets. That will filter onto Bitcoin, that will filter onto altcoins, that will filter onto everything else. The other big winners, as you can see, and I love this because look at the charts here. Circle is trading at $199. That's a $45 billion market cap. Then you've got Coinbase. Coinbase also flying. A lot of people don't understand why Coinbase is flying and Circle are flying. I'll show you that. I'll show you in a second what that's about. That is the new financial system, right? Now, when the Genius Act was passed, let me show you what happened to the old financial system. PayPal, down. Visa, down. MasterCard, down. The old financial system, on the news of the Genius Act, the old financial system started to get hit. And the new financial system is pretty much on a rampage right now. And what we're witnessing, I know like the crypto bros are basically saying, no, it's stable coins. We can't make money from stable coins. You're not seeing the wood from the trees. This is probably the biggest thing that's ever happened to your crypto bags. You just don't feel it yet. Because right now there's $250 billion in stable coins. What happens when that's $1 trillion? What happens when it's $2 trillion? There is so much more liquidity to come up and buy all the coins that it's inevitable that the crypto markets will actually go up. That's excluding all the exchanges and the layer one transactions and the new projects that are all about stable coins and all the money that's going to be made there and the network effect that's also going to be happening. Now, I said to you that I would show you why when Circle goes up, so does Coinbase. So you all know what Circle does. Circle basically issues USDC, right? And they make their money by taking the dollars that you put into USDC, investing them in investments like treasuries, and holding it and earning the interest, right? So you can see that every time that Circle goes up, so does Coinbase go up. And the reason for that is because Circle and Coinbase actually have a distribution agreement. And Coinbase take 50% of Circle's residual USDC reserve revenue. Now, the reserve revenue, as per the SEC filing, is basically 50% of the money that they make on investing the USDC. So 50% of the revenue, exactly, Free made huge money on Circle since we said it. 50% of the revenue that Circle make is actually made by Coinbase. And so right now, I think to be honest, I think that Circle is very, very, very overvalued, right? So you can see it's trading at $200, $45 billion market cap. Coinbase is trading, if you look at this, you can see that Coinbase is trading at a market cap of $75 billion, which means that Circle is trading at 75% of Coinbase's valuation. Ludicrous, retarded. I mean, absolutely retarded, okay? Now, I try to short Coinbase by buying puts. Problem is that the puts are too expensive, which means that the whole market actually believes that Circle is actually overvalued, right? If you can do a trade, then go short Circle, long Coinbase. Then you're in a delta neutral trade. Not a delta neutral, but you're very, 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 very close to that. The other big winners here are Aerodrome Finance. And again, why? Because Circle is more incentivized to push adoption of USDC. And they're doing it on the Base chain. So like you see JP Morgan is bringing banking on chain and they're doing it on Base. Shopify are bringing USDC payments on Base. And the biggest DEX on Base and really the only proxy to be able to invest on Base is actually on Aerodrome, right? Or one of the only ones. And that's to own the exchange on Base, which is Aerodrome. And so that's why Aerodrome is doing well. Look, I'm happy to say that it was one of the 2 calls that I gave in front runners when the prices were down. I gave the calls of Jito and Aerodrome. That was like the 2 calls that I made and we did absolutely amazingly on this. I always say, like, this market isn't giving us much. But whatever the market is giving us is actually all in front runners. And like, if you are a member of front runners, I'm sure you'll admit that the amount of good calls and stuff that happens in there, and that's besides the fact that there's like a really amazing community and stuff like that. Amazing calls. So if you want to join us at front runners, there is a link here. So you can join us. You can join us for amazing calls. So if you want to join us for a month for free, well, you join us if you want. If you don't like it after a month, you basically get your money back. So that's over here. So you can just join us over here using that link. I also want to just talk about one more thing before we go. So the most exciting thing for me is, I don't know how to word this, but I think it's something that we need to understand. I think yesterday was an absolute turning point. I think when we look back at crypto and Bitcoin, we're going to be in a position where we talk about crypto and Bitcoin as before the Genius Act and after the Genius Act, before the Trump administration came in and after the Trump administration came in. Before the Trump administration came in, we had a bad administration. We had Gary Gensler. We had, I don't have to tell you because a lot of you were here. And then we had the turning point. And so in my mind, they're like really two periods. We got Bitcoin to a $2 trillion market cap with all the headwinds against us. Now we've got tailwinds. Now we've gone to a very favorable administration. And we've gone from having terrible headwinds to having probably the best tailwinds we could ever have imagined. And so I think that we need to break up the market progression into two parts, before and after the Genius Act. And I think, let's say that before we got to $2 trillion on Bitcoin, we got to $250 billion in stablecoins. But I think that now the real fun actually starts. And now with real acceptance, people like Walmart and Amazon all launching their coins, it's like you got to be holding crypto. It's the craziest thing. I did an interview this morning with Sheldon. And he said to me, what are you the most excited about? What industries are you the most excited about? And I said, I'm so excited about crypto. And I'm so excited about AI. Like, those are like the two things that I'm really excited about. But the thing that I'm most excited about is the crypto and AI. So it's like, I'm excited about crypto. I'm excited about AI. But the thing that excites me the most is when you put them both together and you get AI agents interacting in crypto. It's crazy. It just becomes a crazy thing. So I think, I know it's quiet and I know that right now it feels like nothing's happening, but the foundations are being set for something that's absolutely crazy. Okay, a few other things. There's a lot going on today. I mean, I like what 𝗙𝗘 from Base said. 𝗕𝗘𝗔𝗧𝗨𝗥 said. He said, wait until every business realizes that by accepting stablecoins, their path to serving customers in every country around the world becomes 10 times easier. Just think about it. Argentina, Brazil, everybody just using the same stablecoins, and then merchants accepting these stablecoins, and they all using our platforms and our layer ones and our layer twos. It's crazy. It's absolutely crazy. All right. Let's go to, and also I saw this chart. This is the chart of Coinbase versus the chart of Total 2, which is effectively altcoins. Now you can see that they pretty much move in perfect harmony, except that sometimes Coinbase moves ahead. White Coinbase moves ahead of Total 2. Now here you can see Total 2, the altcoins have actually gone down, and Coinbase actually goes up. Now, logically, why does this relationship exist? Because remember, Coinbase make a lot of their money from distribution of Circle USDC. And the more USDC there are, the highest Coinbase is going to go. But also, the more USDC there is, the more liquidity there is in crypto markets. And therefore, the more these coins need to turn around. So there could be some kind of turn in Total 2 because we have a lot more crypto liquidity in the markets. All right, lastly, before we go, actually not lastly, second lastly. Sheldon gave me his indicator. Okay, now, as I said to you before, like I've been trying to get the guy to, like, bro, he finally gave me the indicator. And I can tell you that he's built an amazing indicator. Like, I don't know if you guys saw this. Now, look, you can't buy it. You can't buy Sheldon's indicator. Forget it. He's not selling it. He's using it himself. But I mean, just look at the accuracy here. So, like, he said, this is automatic. There's no human intervention. It said there was a short here on Bitcoin on the 4-hour. And there was a long here, and it literally short, stop loss, literally, these things are going into the stop loss. And he's done it in such a way where there's like, okay, like now there's a BNB long. Let's see, there's a screener there. There's a BNB long. So you can click it here. Oh, but you can't click it. You have to go to the BNB chart. So let's go to the BNB chart. BNB USD. But actually, I mean, like I said to him, Sheldon, sell this indicator or at least let us buy it. He won't do it. I literally had to twist it. See, there's a long in play here at the moment with the stop loss down here. And the TP is over here. I said to him, Sheldon, let's give it to the front runners. Let's give it to Sniper Club. He's like, no, I'm not giving it away. I'm not giving it away. So I don't know what he's going to do with this, but I can just tell you that this guy's built an absolutely unbelievable, like the accuracy of this indicator is absurd. I've never seen anything like it. It is absolutely, absolutely absurd. It's exactly Sheldon, but without the emotions. It's absolutely absurd. So look, we can't buy Sheldon's indicator, or at least, yeah, I'm going to keep trying to twist his arm. But if you want to trade with indicators, or if you want to trade with bots, there is somewhere that you can go, and that's our friend David Tech. I don't know if you guys remember David. David is a partner at Crypto Banter. He's one of our partner businesses, and he is a developer of bots. Basically, I think you run the biggest crypto bot website in the world, right?
I think so, yeah. Hi, Ron. How you going, mate?
Good on you, Dave.
Yes. 800 bots are running currently, and we have 500 to add this week. So
I actually want to show this quickly. So this is the David Tech's website. It's david-tech.com. There's 800 bots that are running here. Now, I just want to just walk the guys through. So there's a difference between an indicator and a bot. What an indicator does is an indicator basically shows you different lines on charts and different places that you can get in and you can get out. What the bot does is it actually trades this, right? So the bot would actually trade here and sell there, right, Dave?
Absolutely. So it does all of the handwork to actually get you into the trade. It puts the link between an indicator and a cross over to your exchange, so you can get away from your screens and leave it to be automated.
Amazing. So, Dave, you are starting a cohort tomorrow, teaching pretty much anybody, even my mom, to be able to trade with bots, right?
Absolutely, yeah. Tomorrow at 3:30 London, I'm going to be doing a cohort with the Crypto Banter team, and we're going to be going through bots, how to set up bots in a couple of minutes. Like I said, we have 800, and these are some of the bots and the results that we're getting with them. We backtest every single bot. So everything's backtested, but not only is it backtested, they're also forward tested. So they've tested on live markets. So we make sure they're all working. I try to make it as easy as possible. You don't have to code or anything. It's literally a couple of clicks. Click on this button here, and that connects your exchange through a couple of APIs. And hey, presto, you're done. Your bot is connected. And then we just sit talking about bots and learning how to find the best bots for yourselves.
Okay, so guys, look, there's a link over here if you want to join. There's two links. So the first link is a link to sign up to the course. Sign up to the course. Okay, so go to the course, sign up. You go to this page over here, and literally don't click the pay 1,999 because you guys aren't paying. You click the unlock for free, and you actually get in for free. If you're still sitting on the fence, let's just assume that you're still sitting on the fence. You're not sure whether you want to do it. Listen, the cohort starts tomorrow, which means that in 7 days from now, you'll pretty much have bots trading for you. Anyone will have bots trading for you. If you're still unsure and you just want to ask a few questions, you're not sure if this is the right course for you. Now, as soon as this show is finished, we're going to jump onto this Zoom over here. There's a Zoom link in the bottom here. Jump onto the Zoom and chat to Dave, and Dave will show you exactly what he's going to be teaching in the next 7 days. The markets are quiet now, so if you want to learn this skill of getting bots to trade for you, sign up. And if you're still unsure, just go to this Zoom, click the Zoom link, join the Zoom. There's a Zoom. It'll last 15 minutes after the show? How long will the Zoom last, Dave?
Yeah, 15 minutes, but I'll stay in as long as questions.
Amazing. And listen, guys, I've been working with Dave now for a couple of months. I can tell you he's the best there is. The guy he's a master. Anyway, guys, listen, I'm going to love and leave you all, and I'm going to let you guys all jump onto the Zoom. If you want to sign up, there's a link here. If you want to join the Zoom, there's a link here. By the way, if you want to sign up to an exchange and get ridiculous sign-up offers, I'm not even going to mention how good the sign-up offer is because it's just too good. Go and check out this BTCC sign-up offer over here. It's ridiculous. It's absolutely ridiculous. Anyway, I'll see you guys again in the Zoom. I'll see you guys in the Zoom. Until then, trade well, my friends.